Well, let's now take a look at what you should actually be doing by talking to the real experts. Some of the people who really understand. We're going to talk to people across from real estate to the equity market. And let's start by taking a look at the equity markets and at mutual funds. So we have Radhika Gupta joining us, the CEO of Edelweiss Asset Management Limited, Feroze Aziz, the Deputy CEO of Anand Rathi Wealth, and Dhirendra Kumar, the CEO of Value Research. All three of them with us right now. Thank you so much for joining us. Every Diwali, Dhanteras, I try and put out this show saying, what should people be doing with their money? Where should they be investing their money? So Feroze and Radhika, I'm going to be asking you about the equity market in some detail. But Dhirendra, why don't I start off with you, because you advise people on mutual funds across the board. So if you had to tell somebody right now, asset allocation, because that's a key thing, divide your money into equity and debt and cash and other things, what would you tell people to do right now? Where should they be putting their money?
Yeah, there are only two broad asset allocations which anybody should follow: equity tilted or debt tilted. And whether it be 80%, 75%, 60% is your choice. But any long-term investor should not be scared out of the market today. Market may not fall even if it might look expensive for a while. So don't try and be tactical about it. There are a few rules to follow, which is, be diversified at all times. Don't look for, this sector, this segment, or the small cap, mid cap. Be in an all cap portfolio, howsoever it be, Whether you pick 3 funds or whether you pick 5 funds or whether you pick a multi-cap fund and a flexi-cap fund. Make sure that you're diversified at all times. Yeah. Second is that don't try and time it, and that Indian investors have embraced beautifully in terms of the steady rise of SIP, and the SIP book is quite awe-inspiring. And that has created a context, which is we have such a large number of happy mutual fund investors today. Right. Third is that, most people would like to be, most people will be disappointed if they try and be tactical. Be guided by your goals. If you don't need your money for next 5 years, don't worry about what the market is going, where the market is going tomorrow or day after, because you won't be able to perfectly time it anyway.
I think that's really important lessons. And I know, Dhirendra, you've often talked in shows like this about the importance of systematic investment planning, or SIP. I think a few years ago I said that SIP is the most important word that investors, retail investors who are really watching this show should be keeping in mind, which means put a little bit of your money into the market every month. Don't try and time it, because you will not be able to time it. Even the best experts don't time it. Let me throw the second thing which you were referring to Radhika, and then I'm going to toss the same thing to Feroze, which is asset allocation. So Radhika, about that, and Radhika, you've been very closely involved with AMFI, which is mutual funds. For a retail investor, the basket that they have becomes a really important thing, right? Whether you should have 100% of your money in equity, 75% of your money in equity, 25% in equity, and within equity, what should you be investing in? That is also very clearly driven by who the particular investor is. If you've got a lot of money and you're young, maybe you can take more risks. If you're older and you need that money, take fewer risks. Asset allocation, is that one of the most important mantras?
It is. It's a very critical mantra, and it's one of those mantras people often forget in a bull market, because people start thinking, oh, I can afford to put everything in equity. I don't need to worry about when the market corrects, and protection. And I think the reason for asset allocation is this, different asset classes perform well at different times. Even if you have a truly long-term holding horizon, there are times when you need to take out money for whatever reasons, and equity markets are up and down. I mean, they were down 50% in 2008. And having protection is important. It keeps you in the equity markets longer. Now, how do you go about doing your asset allocation? I think the answer is very personal there. I mean, I would just say a couple of things. One is, even if you're the highest risk investor, please have a contingency fund that takes care of your expenses for 6 to 9 months, because as I said, you never know what equities do. The second is, I think the answer is really personal. And I don't think, Vikram, it is dependent on age. My father is probably 70. He's a very high risk investor because he has a fully paid up home. His kids are independent. He earns pension. So he's a full equity investor. I'm much younger than him, but I have a much more conservative portfolio because I work in a high risk industry called capital markets. So I think asset allocation is extremely personal.